So the question, how much money do I need to achieve financial independence? Obviously, it's going to depend on your personal financial situation. So what I'm going to do is I'm going to give you a framework that you can take and apply it to your own situation. And I've got some notes here that I'm going to refer to, and then what I'll do is I'll even show you kind of a model that you can take and use to really figure out what you're going to need in order to what I'm going to tell you is like either base camp 1 or milestone 1, which is how do you replace the expenses that you're currently paying on a monthly basis. Okay, so I'm going to give you 3 steps, and then I'm going to show you the framework. So step 1 is really to get extremely clear on what is your, I call it your burn rate. How much does it cost to just maintain your expenses, your family, your household for a month? Okay, so I'll give you an example. I'm not too far off this, but let's just say it's around $10,000 a month. Mine's a little more than that, but let's just use 10,000 because it's easy math. Okay. Now step 2 is you're going to calculate, and you're going to do like for businesses, this is your balance sheet. Okay. So you're going to do all your assets minus your liabilities, and then you're going to figure out based on assets, not your house, but stocks, maybe real estate that you own right now, how much cash flow are you generating from those assets right now? So let's just say you've got $1 million in assets outside of your personal residence, and they are paying you $20,000 a year, $24,000 a year. Okay, so $24,000 a year, you're essentially getting $2,000 a month, right? So now you've got point A, which is where you're at today. You've got $20,000 a month in, or $24,000 a year, sorry, $2,000 a month in passive cash flow. You've got $1 million in personal net worth outside of your personal residence. Point B is like milestone 1, which is $120,000 a year or $10,000 a month. Now this is what I call like your security bucket. So how do you essentially cover your monthly expenses? And eventually you'll get to milestone 2, which is how do you replace your earned income, right? So maybe your earned income is $300,000, $400,000, $500,000 a year. What assets are going to be necessary for you to replace that? So here is, this is just a really simple point A, point B model that you can kind of visualize. And here's what's, I think, really important. A lot of clients, when I first start working with them, when they go through this exercise, even though it's very simple, right? All you're doing is you're figuring out your balance sheet, assets minus liabilities. What's left over is your equity. Next, you're going to figure out what your cash flow is based on, you can include your job in there just to figure out, or your business. But then what I really want to do is figure out how much are your assets paying you on a monthly basis. This to me is just so important, because when I go through this exercise, a lot of clients, the first time they do it, they realize that they've got significant assets, but typically are underperforming. So I'll give you an example. I can't give away too much, but I've got a client that has in excess of $1 million in real estate. These are residential properties. And when we did the math, he had a lot of equity, very little mortgages. However, they were only paying him on a monthly basis because he didn't have a lot in mortgages, but he was, there were condos, and so he was paying condo fees and property taxes, and the rents weren't, at market. And so he was maybe generating, I want to say around $1,500 a month. And so when we did the math, he was getting less than 2% on his investments. And so I'm not giving you specific financial advice in terms of what you want to do, but in this gentleman's situation, he is, now that he's working with me, he's understanding that commercial real estate, a good property, nothing crazy, nothing super risky, is going to pay him about 6% cash on cash, plus his principal pay down, meaning the mortgage is going to go down on an annual basis by about another 6%. So once we find the right property for him, he is going to refinance some of those residential assets. They'll still break even in terms of after his mortgage and maybe pushing the rents a little bit. But now he's going to put that net worth, those assets to work. So that instead of earning 2% a year, now he's going to be earning 6% a year. So let's just say, for example, that he's got $1 million. He's got more than that, but let's just say it's $1 million. $1 million at 6% is going to earn him $60,000 a year in just free cash flow. But if you remember, he's also getting phantom income, which is principal pay down of another 6%. And so now that's going to essentially equal $120,000 a year. 60 that he can access and 60 that is kind of baked in or hidden or into the future. So just if you go through this exercise, point A, where are you today? How much are you earning on your assets? How much how much do you have, I suppose, in terms of net worth on your balance sheet? And then how much are you going to require in order to cover your monthly expenses? If you can get that and really kind of work towards that, maybe it takes 2, 3, 5 years. At that point, you've got security, you've got financial independence. Then you can get to comfort, which is replacing your annual income, and then further down the road, which is legacy. Now you've got more money coming in and you're able to contribute and give back. So hopefully that helps. If you want specific details on that, I'll have a link below that will help you with what I call your FU calculator, and you can start to figure out based on the type of returns and the type of investments that you're looking at, how much you're able to invest on an annual basis and how much you're able to save and how much you're able to grow your net worth over a 5, 10, 15-year time period. So that's it for this video, and we'll see you in the next one. Bye for now.